And Ross, the boss of BlueScope Steel, despite record profits, has issued a warning about the viability of business because of those soaring energy prices.
Yeah, well, it's true also, Kieran, because BlueScope is not just Australia's largest steel producer, but also is quite clearly impacted by the rising price of iron ore and indeed metallurgical coal, which it needs in that steel-making process. But on top of that, there's even the price of electricity that it requires to heat its furnaces and to keep them going. But it's not so much that, it's actually the customers of BlueScope that also require the energy and also the steel that they require for their business that he's actually talking about here. So today, BlueScope's profit is out. It's hit a record level for this past financial year. The revenue's up 47% there. You can see the profit has more than doubled to $2.81 billion. The dividend also stronger as well. There's going to be a significant overhaul in regards to the use of Port Kembla, Australia's largest steelworks, as I say, and could free up some 200 hectares of land around that steelworks currently. But let's just go to Mark Vassella, who I spoke to a little earlier today, the chief executive of BlueScope Steel, just in regards to the viability of many of its business customers.
What I'm concerned most about, Ross, is the impact it has on our customers and the downstream businesses that support the steel industry, so the supply chain that we operate within. So we have to get energy prices fixed and a policy around energy in Australia fixed. To give you some perspective, I mean, we operate obviously in the US, throughout Asia. In the US, our energy costs are about 50% of what they are here in Australia. So that just gives a much greater level of certainty and financial return and surety around the investments that we make. So we have to get energy policy sorted in Australia.
Another company that reported today, JB Hi-Fi, shows that despite high energy prices and the other inflationary pressures, there is no slowdown in our spending, particularly on electronic items.
Right, so this is JB Hi-Fi, which is almost a phenomenon in Australia, just a success. So again, company profits coming out from a range of different companies. This one again shows the strength of this particular business. So in the past year, revenue's up 3.5%, $9.2 billion. Look at the profit there, up by 7.7% there. The dividend also very strong, has been increased for its shareholders. Now, you know, this is coming off the back of what's been an increasingly difficult year for consumers as interest rates start to rise. As you've also got the cost of living increases, including petrol in particular, does affect consumers. So Terry Smart, who is the chief executive, still is optimistic about the Australian family's ability to absorb some of these increased costs.
Oh, look, we've seen across JB Hi-Fi, we've seen mobile phones continue to be really strong over that period. TVs, even though we were short of stock, TVs continued to be really strong. And obviously a big one that was out there was computers, with the work from home that everyone was either forced to or was doing.
And finally, Ross, as share prices have fallen the past couple of months, the hunters are zeroing in on Australian tech shares.
Oh, it really is true, and we saw that especially today with a private equity firm, it being announced, has got interest in buying one of Australia's really interesting pieces of technology, a company called near mapping. Now, near mapping takes very high resolution photographs, aerial photographs, like these ones we're seeing right here. And so that, of course, helps anybody who's trying to track population, housing, for retail developments, whatever it might be. And so the issue of this particular company is it has competitors in the United States, but now it seems as though it's fielding a $1 billion takeover offer. The share price at one stage had got out to $2.80 going back 2 or 3 years ago. It had got down to about 80 cents, but now it's popped today. $1.90, you can see here, the share price up by some 25% off the back of this announcement. Now, nothing concrete has actually come at this stage. This is simply saying that there is an offer out there. Some in the markets today suggesting that maybe it even might flash out a separate offer for this business at an even higher price.